CMHC is becoming the largest landlord in Canada. How do you guys feel about this? Your tax dollar is going to fuel the largest landlord in Canada, the Canadian government. CMHC was kind of started off to help first-time home buyers get into the market. And now what we've seen them do is introduce these other programs where they're helping mid and large developers build these rental units by offering insane financing options over here. Some of the facts I wanted to share with you guys over here, because it's changing, and it's changing really fast. And I think this has been in play for the last 12-ish months. So it is relatively new, but I think it's going to continue to go. And it probably has to do something with a bigger agenda. Not to be a conspiracy theorist, but there are obviously changes that are happening that I think you guys should be aware about, especially if you're watching this. You're probably interested in real estate to a certain degree, and this is going to start to reshape how our real estate actually works in our markets and our investors. So one of the things I want to tell you guys is that in 2024, CMHC insured $213 billion of apartment buildings. And that was way more than what they insured for single-family residential homes. And in just 1 year, that increased by 28%. This increase is because they've actually changed the terms of what their program actually is for people that are building purpose-built rental units. The MLI Select program was introduced, and it replaced another program that they have. And with this program, if you meet certain requirements, they have a very compelling offer where they'll finance 95% of the project. And on top of that, you can get up to a 50-year amortization. The catch of this is that who are they really helping right now? They're helping mid and large institutional builders. They're not helping me, they're not helping you to get into this. They're not helping the single person, they're helping big businesses become bigger and really trying to control the rental units that are available out there, instead of helping people that are looking to kind of get into the market. Even further to this, they have invested over $52 billion in building this, and most of it is a link to affordable units that are going to be built. They're not trying to help people get into the market and promoting home ownership. Now they're actually promoting people to rent properties from them. Could this be a shift from not collecting so much money on land transfer taxes and other things that they get when people purchase homes? Now they're going to have this reoccurring revenue from rent or these mortgage payments that they're going to get from the builder. Maybe they're just trying to change somehow of where they're going to get this income from. Now, on the surface, for renters, this could seem like a good thing, right? You're gonna have more inventory out there. You're gonna have better quality buildings, a little bit more structured with what's gonna happen with it. You're gonna have better amenities, maybe more security to be in the unit long term. But it does come with a catch at this point right now. It is, again, encouraging people to go into a rental versus actually trying to buy a property. And whether that's right or wrong, whatever your goals are. But what we're already starting to see out there is that when we have a rental unit out there that is basically, call it $3,000 a month, and it's really a luxury unit, and it comes with all these bells and whistles and everything else like that, but then you have to pay $3,500 to own something that's not as nice or whatever else like that. People are actually moving towards the more luxury rental, and they're saving $500 in their mind, and they're getting more of the amenities and whatnot, but they're getting away from the home ownership. So I think somehow this is going to start to become a problem in our market. And the piece I want to touch on next is that what if you're an investor? What if you're a buyer? How is this actually going to affect you guys? Well, if you're a buyer, this could affect you in a way, and it may be a positive way if we're looking at some of these units that may get offloaded by investors. If you own one-door rentals, I would seriously be looking at that right now. And I am looking at my portfolio as well. And if I have one-door rentals, and what do I mean by one-door rentals? If I have one property that has one family that could live in it, I'm also considering this and looking at it and saying, hey, I don't know if the future is looking so great on it. Some of these properties people are holding right now, they might even be out of pocket on, which a couple of them I am out of pocket on every month. So even after collecting rent, I'm adding money on top of this whole thing. And before, you might have been able to justify it and say, hey, the appreciation is going to be there, but I don't see that happening either. So you really have to start to question yourself, okay, I'm paying out of pocket, the appreciation is not going to get there, and now I'm going to compete with CMHC on the rental market? I think we're going to end up getting wiped out over here. So again, if you have like a one-door unit, I would seriously be considering putting that up on the market. Unless you bought it in 1970, you may want to consider actually looking at this and saying, hey, where's the rental market going, and what should I be doing to possibly get out of it? You know, it is going to ease the pressure for tenants at the same time. This is going to increase the inventory that's available, and it's going to encourage probably more people to rent. This is a good thing to a certain point, but I think it also kind of, in my opinion, softens people up a little bit. And I might get some hate for this, but it's like, now we're not really encouraged to buy anymore. We're not trying to save money. We're not trying to get to the next level of saying, hey, we can actually own this thing. And we're becoming, and we've talked about this in other videos as well, because we've seen more and more purpose-built rentals come out. We're starting to become, the next generation is starting to become a generation of renters. Even, you know, if we sit down with somebody that thinks that they can't afford it, we break down a price of a $500,000 condo compared to where they are living right now, and we look at the down payment. Okay, you can meet the minimum down payment requirement, you can have the closing costs in your bank, and maybe it's marginally more. Maybe you're renting right now for $2,600 a month, and it's going to cost you $2,750 to actually buy this unit. But guess what? When you pay the $2,750, you might be actually banking $300, $400 towards your principal, which you're not when you go to rent. So when you look at it, you still might be actually able to buy. But the decision's coming down to a lot of people and saying, why should I do it anyways, right? So I don't think that we are encouraging people to buy. I think we're actually encouraging them to go into the rental market. Again, what does this mean for investors that still want to be a part of this? And referring back to myself again too, I'm looking at my one-door family rentals and saying, I don't think this could be a smart investment right now to be into anymore anyways. I'm looking at maybe saying, hey, maybe I want to get rid of these things, and maybe I want to try to build something or invest where I can have 10 doors, 12 doors, 20 doors. Maybe I want to partner up with somebody and say, hey, let's go after 40 doors, 50 doors, and start to become that mid institutional investor into these things, because that's where I'm going to get the support from the government. If I want to get a CMHC loan and get them to finance 95% of it, maybe I might take that money and start to construct something that I can qualify for this CMHC loan, where I don't have to put so much money out of my pocket, but I end up owning this asset. So I think we have to start to think differently. As these things are shifting, we have, as an investor, we can't keep doing the same thing, because the same thing is not going to work. So if you're waiting on the sideline to say, hey, there's going to be this whole growth spurt, I don't think so. And not to offend people, but a lot of people thought they were incredibly smart investors in 2019, 2020, 2021. It can't go wrong. I bought this. It went up so much money. I'm renting it out this. I'm cash flow positive, blah, 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 blah. Those same people are crying right now because it was fake. When you see so much hype happen and happen so quickly, and there's no foundation to kind of go off of, this is what happens. So I think if you educate yourself and you're a smart investor at this point right now, you should be looking at this and saying, hey, how can I maybe eliminate some of the stuff that I have, or how can I shift some of my dollars into doing something like this, because it looks like this is what's going to end up happening next. Honestly, I'm not too impressed with CMHC doing this, and they have their own agenda of why they are doing what they are doing, and they're going to increase the stock. I think the silver lining to this could be is that our new home starts are down, and they're going to be down like 80%. So there is going to be a lot of unemployment that comes from the sector. I think in Ontario, it's about 600,000 people that are employed in this, and around or maybe just under 400,000 in the GTA. So now if we get more projects like this, hopefully that picks up some of those people that would be unemployed and give them employment to continue on to these projects. So there is a silver lining to this whole thing. But again, who's going to win out of all this in the long term? It's going to be the people that are that larger institutional builders. They're going to be the ones that are taking advantage of this, because they can easily build these, 30, 40 story buildings and have like maybe a block of them dedicated to affordable housing, so they can qualify for these loans from CMHC. So I don't think it's going to be the average Joe like me that's going to be able to win from this thing, unless we reposition whatever investment strategy looks like moving forward. I hope this was a little bit eye-opening for you guys. I want to know what your feedback is about this. How do you guys feel about CMHC taking the pedal off the gas and trying to help first-time home buyers get into the market and shifting their investment over to institutional? People that are already making money, by the way, they're trying to fuel their pockets right now by offering these type of programs. And for sure, it's going to open up opportunities for maybe some people like me that might be willing to get nitty-gritty and figure out the details of this and work with somebody somebody and trying to figure this out and get into this. So there might be opportunity for some people to get into it, but I don't think this is an opportunity for most people. So I want to know what you guys think about how the government is spending your taxpayer dollars when they're shifting their focus on doing something like this. Do you think this is worth it for your tax dollars? Let me know what you guys think. I hope you guys enjoyed this. I hope you guys got some information, something to think about out of this video. Please go ahead and subscribe. Share it with your friends that are thinking about investments, possibly unloading their investments. They may be interested in this as well. And please like this. And again, like I said, subscribe. I think we have really good content on here and you don't want to miss out on it. Until next time, guys, remember one thing: get Kabani, get sold.
Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold.